Today, we're going to be looking at what are some of the ways you can get into property investing without any money. This is a question that I get from so many people asking me, hey, how do you think I can be able to start investing in real estate without any cash? Most of the time, property investment is one of the surest ways of, securing your financial future and making sure that you're building wealth. It's a very good way to conserve, to build wealth. But most people don't know where do they start. Sometimes they don't have enough money. Sometimes you're wondering, hey, I don't even have these millions of money to buy, a house. How will I start my journey to property investing? So this is going to be a very informative video, very short, very brief, but straight to the point. I'm going to give you a few pointers on how you can actually get onto the property ladder without actually having lots of money upfront. Because sometimes that's the main problem that people have. And you also don't want to take a mortgage upfront because the mortgage is going to tie you for so long. And you want to have many properties. You want to invest in different properties. You want to invest, for the future, not just where you live. I've said here before that sometimes where you live is actually not an asset, but a liability to you. So taking a mortgage for 30 years doesn't really mean you are in the property ladder as such. It just means you have a house that, you're paying a debt on or a mortgage on, but doesn't really mean that you are invested, that you're now fully invested in the property market. There are those who want to invest properly in the property market, and those are the people I'm speaking to. Welcome to Case Money Matters. As usual, here we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income. Basically, financial freedom. Guys, all we want here is financial freedom, the freedom to do what you want at whatever time. And one way is by investing in real estate. Real estate has ensured that people can actually live the life they want without a 9 to 5. They make lots of money per month by just getting some money from the houses or from the properties that they own. And there are many ways of owning these properties. You don't actually just have to follow a single path, but you have to be ready for some good work. So what are some of the ways you can actually own property or get on the property ladder without having lots of money upfront? Number one, and the most important one for me, is your mindset. This is free. Most people have that fear. We are born with that fear, and we have what we call financial trauma. And by the way, if you want financial coaching, Case Money Matters is always available. We talk about financial trauma. We have fear of taking risks. We have fear of, going above and beyond and doing research and doing things. We see lots of obstacles before we even begin. So if you don't have the right mindset, you will fail in this journey of trying to invest in property. So number one thing is, have the right mindset. Know that this is possible. Know that so many people have actually started from nothing and built amazing portfolios in real estate. So you have to have the right mindset. I always start with the mindset because it's the foundation for everything. If you're jumping around, finding the opportunities, but you don't have the right mindset, chances are you will never ever succeed. Before you start something, have a right mindset. Have a foundational mindset. Let something set you off. Let that fire set you off. And then everything else will fall into place. Don't look at the obstacles. Don't be fearful. Be decisive. Know exactly what you want to achieve out of it. Have very clear objectives and goals. And then get onto that journey with confidence and determination. And be ready to face some challenges. Be ready to overcome them. Be ready to invest your time, attention, and do a lot of research and networking so that you're in a position to actually make money from the real estate market. So the first point is having the right mindset. If you don't, you're not going to succeed. But if you do, you've already covered 70% of the work. What's left is just the practical 30%. So now the second practical way, or which is the first one now, would be to take in a lodger. So this is a very common thing nowadays. If you have a big house, probably you're even single, you can take in a lodger. So most people nowadays have massive houses or they rent a bigger house, take in a lodger, and then they're able to actually get rent or even save money from that particular arrangement. So you have someone living in your house in an extra room and that person is paying you money. So most of the time, even if you, let's say you have a mortgage, for example, and you have a big house, instead of having rooms just lying there, have someone live in those rooms, they pay you money, and that money can also help you set off your debt if you are having a mortgage. If you don't have a mortgage and this is your own house, then this is a way of getting some money to start investing. Already you're making money from your house. Already you're making money from your property without actually investing in that property. So if you're taking a lodger, some governments actually support this process of taking in lodgers. It's like a rent a room, it's called rent a room scheme. Sometimes they allow you or they support you to help other people find a home within your home. This is basically free. It's a free way to start earning money from your property. It doesn't matter whether it's mortgage property, whether it's your own property, you will be able to save money and get extra income that can help you towards setting off your debt or towards investing in something else, including other properties. So you'll be getting money, free money, and saving money in the process. So guys, if you have a free room, if you have a space that you can rent to some other people, don't have spaces lying bare, but start renting out those spaces to other people and start making money. That way already you are investing in property without actually putting in lots of money upfront. The third one is what we call the real estate investment trust, which I love. Real estate investment trusts are basically mutual funds that are focused on real estate. So investors come together, they pull the money together, then they invest that money. They pull the money together, then they invest that money in real estate properties. And they're obligated to give back the profits to the investors. So instead of you owning physical property, you can actually buy shares in a real estate investment trust. This way you don't have to actually deal with, tenants and rental issues and stuff like that. Basically, someone does all that for you, and all you get is capital gains or the profits that they get from those properties. It can work so well. I have some shares and it really works well. REITs is an amazing way for you to start investing in the real estate market. And some of the REITs which are actually offered as ETFs or exchange-traded mutual funds are very cheap and very affordable. So you don't have to have $10,000 or millions of money to start investing in REITs. You just need maybe $100, $200 and start investing in the property market. You won't own the physical property or a physical project or a development, but you'll be owning shares in a company that actually invests in real estate. And when they get their profits, all the profits come back to you, and then you can reinvest the dividends, and that's how you get into the property ladder. With time, you get lots of money, and without owning any physical property, you are a real estate or a property investor. Very easy. Rates are available all over the place. If you look at different brokers, they always offer rates. They offer real estate investment trusts. Including in Kenya right now, we have rates. And I've done a video on that. If you want to check rates in Kenya, check it out on the links below, or I'll leave it somewhere here. Then we have peer-to-peer lending. This is whereby you invest with another person or a different company and not a bank. In this way, you're cutting off the bank, and therefore the bank is not able to get their cut, which usually push the prices quite high. With peer-to-peer lending, you're in a position to complete your transactions without actually involving the bank. You can complete your transactions without involving the bank. You can use different platforms like Zopa, which are peer-to-peer platforms, and complete that transaction and cut off banks completely and ensure that you can start investing in a property without actually paying so much fees in terms of, bank requirements and legal fees and stuff like that. Peer-to-peer lending is an interesting way. It's a bit complex for some people, but it's a very easy way to start investing in property without spending so much money. And most of the time when the banks are not taking their cut, your return on investment will always be quite high because banks do charge a lot of money in the process as brokers. So the only backside to this is that most of these loans, which are peer-to-peer lending, are basically unsecured loans. So of course, if something happens, it becomes very difficult to trace it or to recover your money. But peer-to-peer lending, as a way of investing in property, is one of the best ways you can actually get into the property ladder and start having really liquid money, which is not very common in real estate investing. But with peer-to-peer lending, there's liquidity. You have money that is flowing, basically. So peer-to-peer lending is another way in which you can get to the property ladder. We have what we call property crowdfunding, which has been happening actually in Kenya and Africa, generally speaking. This is where a group of people just come together and they buy property, and then all of them own shares. Now, because property can be very expensive to buy, and that's why we're doing this video, sometimes you need other people to come together and help you buy it, and then you can own different shares. This is something that has been done by so many people. If you read stories of amazing young people, border riders, Chama women who just came together and they brought their money together and bought property, they have been doing really well. And there's so many of these stories in Kenya. So if you have a group of people, an investment group that can actually buy property, that's another way of getting into the property ladder without actually spending so much money. Because, for example, there was a story of some riders in Kenya, border riders, who were contributing 50 shillings a day. At the end of the day, they had amazing valued property. And these are people who are not making like millions of money. They're not contributing hundreds of thousands of money. They're only contributing some little money. And don't confuse property crowdfunding with peer-to-peer lending. Peer-to-peer lending is quite different. Property crowdfunding is more like a group just coming together and then you own shares. It's different from the peer-to-peer lending. So guys, if you have a group of people, you are doing something amazing. I always tell people, don't have all these funeral groups, wedding groups, party groups, and you don't have an investment group. People you share the same values with, the same goals with, and you share the same ambitions with in terms of what you want to achieve. So if you can get that group of people together and tell them to focus on a particular goal or a property ownership, then it's an easier way of getting onto the property ladder of the real estate market. And the moment you own one real estate, you just know it's just the next one will be so easy because you can now use that one as collateral to get way more properties. Usually the problem is getting the first property and paying it off. It becomes a snowball of sorts, whereby you just buy more and more and more, and within no time, you have a good real estate portfolio. This has happened a lot across Africa and across the world. So another way is look for government schemes or programs that support property ownership. This is another way you can get onto the property ladder without actually having money. So most governments do support people, for example, to own their first homes, for example. If you're a young person, a certain age bracket, you want to own property, there's lots of support. So look for these schemes, look for these grants, look for ways in which you can be supported by these organizations, or I could say institutions, that will then help you put you on the property ladder. A lot of things are available out there, but information is not. So you have to look for the information. A lot of grants are available for young people, for those owning their first homes, for those owning their first property, and a lot of these grants that are just trying to support people to get into real estate. Look for these opportunities, apply for these grants, apply for these ways in which you can be supported and get onto the ladder. Sometimes they give you very, very, very cheap loans, or basically grants that you don't even have to return. But these things are things you have to look for. This information is available. There are so many places in different governments where they offer certain schemes, certain support to people who want to own property. This is a good way to start owning property without actually having lots of money upfront. Of course, now you're going to have some loan probably, but it might be very cheap loan, or you could be lucky to actually have a grant. So government schemes is a very good way to help you get on that property ladder. And then you could also do what we call buying of UMV, which is the under market value properties, and then you flip them. This is one of the best strategies people have used, but can also be one of the most risky, because if you buy the wrong property and you are not able to sell it, then you go underwater. Now, in this case, of course, you will require some money, but you will go out there looking for undervalued properties, properties that are run down probably, properties that nobody wants probably, and then you try and make it something, you try and make it very interesting, you try and make it, attractive, and resell it. This can give you amazing, amazing money in real estate, but if you get it wrong, if you don't do your research well, if you don't actually do proper cost analysis and know exactly what you're going to spend to bring it back up and sell it at a good price, then you can end up losing lots of money. It's a risky way, but it's a way that some people have actually made lots of money. So you'll be looking for, rundown places, auctioned houses, what we call the off-market properties, repossessed houses, or houses from ex-landlords. There are many ways you can always get properties that are just under market value. Make sure you can, flip it around. You can make it something interesting, something attractive, and then you can sell it out. So there's another way of ensuring that you get onto the property ladder. And so many people have actually done this and made some good money out of it. That's another way you can actually start getting onto the property ladder. And there are so many other ways. This is not exhaustive, guys. I was just saying, you can actually get onto the property ladder without having so much money upfront. And most people do not know this. This is possible, guys. So I hope this is helpful. It gives you some encouragement or ideas. Otherwise, guys, thank you for being here. Thank you for listening. And I hope this is helpful. See you next time, in and out. Please share, comment, like, and subscribe to Ken's Money Matters. I hope this was helpful. See you next time.